When the Tax Cuts and Jobs Act passed, it was all over the news, getting a lot of coverage. Now it's time to get a Klatskin accountant expert in your corner and make sure you're covered. Here are 10 tax planning strategies under the Tax Cuts and Jobs Act. Number 1, make sure you calculate your kiddie tax correctly. For 2018 through 2025, the TCJA, as it's called, left a lot of kiddie tax rules the same, but it did change the rate structure, so it's now very important to pay attention and make sure you're calculating it correctly. Number 2, good news for business owners about depreciation. The TCJA favorably changed some of the most widely used deductions for purchases of qualified property, including Section 179, which allows for the immediate deduction of part or all of the cost of qualified property. Number 3, don't get caught deducting unallowable entertainment expenses. For 2018, Congress eliminated the 50% deduction for most entertainment expenses. Business meals will continue to be deductible at 50%, but make sure you know the requirements. Number 4, get your educational tax benefits straight. Education is one area that the TCJA shook up quite a bit. At best, the topic of tax breaks for education expenses is confusing. There are multiple breaks with multiple sets of rules. But don't worry, your Klatskin accountant will help you understand what you need to know. Number 5, pay attention if you're a homeowner. The TCJA brought 3 major changes for homeowners. The first change is the amount of your property tax deduction. The second is that the mortgage interest deduction is limited based on lower mortgage loan amounts for acquisition debt incurred after December 15, 2017. The third is that the deduction for home equity indebtedness is suspended unless the debt is secured by the residents and the money is being used for improvements. Number 6, changes to retirement and IRA plans. The TCJA didn't directly impact retirement plans as much as other areas of the tax code, but there are still some notable changes that are worth discussing. Understanding what tax benefits are available for you to utilize in the management of your retirement account is a very individualized topic because everyone's situation is so unique. Feel free to call us at Klatskin if you have questions. Number 7, more ways for your family to save. The TCJA includes a number of changes that impact your family finances when it comes to tax time. Here are a couple of the notable ones. No more personal and dependent exemption deductions, and bigger standard deductions. For 2018 through 2025, the standard deductions are almost doubled. The two of these together will help some families and hurt others. Number 8, impact on partnerships. The TCJA includes several changes that affect partnerships and LLCs. Many of them are good for small business. Here's the skinny. The technical termination rule is repealed. That is a good thing. The TCJA also implemented lower tax rates for individual partners and LLC members and added a new pass-through business deduction. 2 more great business changes. Number 9, the new pass-through income rules. The TCJA created a new tax deduction of up to 20% of income from partnerships, sole proprietorships, and other pass-through businesses. There are a lot of factors that play into the size of this deduction, and this change actually gets quite complicated, so contact us to discuss. And finally, number 10, no more deductions for alimony. The old tax laws are still applicable for divorce settlements prior to 2019, but for payments made under post-2018 agreements, the TCJA eliminates deductions for alimony payments. And there you have it, 10 things you might not have known about the Tax Cuts and Jobs Act. Be sure to consult with your Klatskin accountant who can help you understand the rules and minimize your overall tax liability.